Well, good morning, ladies and gentlemen, mums and dads, boys and girls. Dornbush download number 62. Bit of confusion about the numbering. I can assure you it is Dornbush download number 62 this morning. Filming this on Wednesday. Joining me, Andrew, is Michael. Michael, what's going on? I meant to say before, you've got a bit of the hirsute stuff going on. Are you Movember?
Well, I am sort of unofficially. Okay. So, yes, we're not sort of raising any money here in the firm or anything like that, but I thought I'd go out
I'm happy to give you a hand.
In sympathy, I guess, so to speak. So, but yes, thought, what the hell? I've gone for the lamb chop look this year, so we'll see how that progresses over the coming weeks.
See, that would take me 6 months just to get to that point. So you've done well in the 6 days that you've been going so far. Well
thank you very much.
Thank you very much.
We'll keep everyone updated, of course.
Never mind. Anyway, let's talk about finance. So, a bit of an interesting week. Yesterday was our first positive day in 7 days, Michael. So, not quite as bad as it was back in late August and early September, but nevertheless, people just getting a little bit skittish. I see we're up this morning about 40 odd and an okay day yesterday. But confidence still is a bit patchy at the moment, isn't it?
It is, Andrew, certainly. I mean, we saw the Federal Open Market Committee in the US coming out and keeping interest rates on hold over there, which was broadly expected. Reserve Bank here yesterday, keeping interest rates on hold, and it was a 50-50 bet probably up to the end, but I think most people were expecting an on hold call, which we got, but yeah, certainly market yesterday, really did rally up quite strongly, but as you say, yes. It's still a bit of a 2 steps forward, 2 steps back scenario. We saw the market retrace significantly there, last week or so, coming back into those low 5,100 sort of levels. So, but it has been very encouraging to see the market hold at that 5,000 point mark. It seems to be a very stubborn level of resistance, which I think we can take a fair bit of solace out of. So.
I have to say, I did to get some perverse enjoyment out of seeing that the Reserve Bank also meets on Melbourne Cup Day. They're sitting there with their lunch and what do you reckon, boys? Up, down? That's too hard. We'll just leave it on hold. So, hello, Glenn Stevens. I'm sure that's not what you do. I'm sure you do an excellent job, but it's just got that Cup Day. Are they really putting 100% into it?
It has got that feel about it.
Anyway, I'll behave myself.
Glenn, hopefully you had a win yesterday, mate.
Giddy up. Speaking of wins, Suze, Pirates of Penzance.
Cleaned up.
Suze's mum, well done to Suze's mum. So let's just say Suze is doing morning teas for the next 12 months. That's how well she did yesterday. I don't think she needs to even come into work.
Absolutely, yes.
It was a cracker, 100 to 1 choice. We'll make Suze an advisor. Anyway, let's get back onto business. So we've been talking the last few weeks about bank profit reporting season, and we'd had... who was it? One of the three, isn't it terrible? But anyway, do you want to give us a quick overview as to how the bank profit reporting season went, or you want me to do it?
Yeah, look, Andrew, again, we have been talking a lot about the banks and, certainly, NAB, Westpac, which sort of preempted their results, prior to the big capital raise, and of course that's sort of still bubbling away at the moment.
Next Tuesday. Next Tuesday to do it.
Yes, absolutely. So, and I think the rights actually cease trading today. So, but back on topic, look, I think results were pretty much in line with what markets expected. We saw a little bit of dividend growth. Certainly, as always, the key concerns were, the net interest margins, the growth in bad and doubtful debts,
which increased pretty significantly, but albeit off a pretty low base.
Yeah, absolutely, and certainly too now, a lot of focus on common equity, Tier 1 ratios, which are all looking reasonably solid. There's still a good portion of analysts that believe, that the banks have still got a little bit to go. But I think all in all, they're holding up, in a reasonably healthy position. And again, certainly from an investor point of view, as we've been flagging the last couple of times, dividend yields of 6 to 6.5% on current pricing. Throw a bit of franking in on top of that.
It's pretty attractive.
Looks pretty good.
But I think the key takeaway, though, Michael, as you rightly pointed out, was that there was an incremental increase in dividends. So if we go back the last 3 or 4 years, we were seeing 5 to 10% increase in dividends every year. Those days are gone. You know, by virtue of having to go out and raise all that capital, as you said, Westpac's doing at the moment, ANZ selling Asanda to Macquarie, you know, all these different things that are going on. Banks are being forced to hold more capital in case Sydney and Melbourne home loans go bad, which is great. It protects bank shareholders, but the flip side is that capital can't be used to go out and lend, and as a consequence, that profit growth that we've seen in the past won't be there. They'll still punch out their $28 billion after-tax profit every year, so don't, you know, send any condolence cards to the CEOs of the banks. They're not doing badly, but from a shareholder point of view, sure, you'll still get your 6.5% fully franked dividend, so it's not dreadful, but you're not going to get that pay rise that you've had every year for the last 3 or 4 years as well. And I think between that realisation and also banks raising capital, that's why the bank prices will also remain pretty capped as to where they are at the moment. I mean, do you agree? You wouldn't see too much growth going on there, would you?
Absolutely right, Andrew. And really the last few years we've seen revenue growth in the banks literally at 1 to 2% per annum. So, you know, the rise and the jump in profits has basically been driven by a reduction in provisions, cost cutting, which can only, you know, you can only get to a certain point where, you know, until you can go really no further. And we're getting pretty close to that, you'd have to think.
Yeah, and yet we saw we saw business confidence come out, was it Monday? And business confidence was actually pretty strong. And business confidence is actually a leading indicator of the economy. That means they might have a greater propensity to go out and borrow. And obviously they're going to borrow lots more than mums and dads. So again, we're not painting a dreadful picture for the banks, but all we're saying is they've had a pretty good run. They're still going to keep paying good dividends, but, you know, whether, you know, like say NAB at $31, it's okay buying, it's not great buying. Similar with it. ANZ is probably out of the 4 at 27, given that the market probably disliked their result the most. It's about a 6.6% fully franked dividend. That's probably the one that looks interesting, the most interesting. But again, you know, we're not talking CBA and ANZ. Hopefully you got a wide enough shot there, April. It's more CBA, ANZ, like they're quite close together from a valuation point of view. Anyway, we've spoken a lot about the banks.
Yeah, absolutely. And I guess just to throw in there too, Andrew, you know, we saw the out of cycle interest rate rise from all the banks as well. So yeah, you know, there really is a batting down the hatches there, but you know, from an investor point of view, still very solid. And again, from an income side, hard to beat.
The other one that you wanted to briefly touch on, because we've spent so much talking about the Banks and Suze's Melbourne Cup win, is Graincorp.
Yes, Graincorp. Yeah, we sort of dropped off the radar a little bit here in the office, and we're probably not huge fans of agricultural-based companies, but they came out yesterday and effectively preempted the market. They'll bring their official full-year results. They report up to the end of September. On the 12th of November. But basically, I guess, coming out with a profit warning, I suppose, for want of a better word, basically underlying profit for Graincorp around the $45 million mark, which was the lower end of the underlying profit range that the company gave earlier on in the year. It was $45 to $60 million.
Wow.
Basically, yeah, the marketing division is actually going to incur its first earnings loss in over 10 years. So that's where they're really getting hurt at the moment. Of course, we've got extremely strong El Nino system that's sort of going through. So the outlook, you know, for the eastern side, grain production levels looking pretty ordinary. Albeit, I see ABARE reckons that they're going to jump by 12%, but that's probably looking a little bit optimistic at this stage. But yeah, certainly marketing, increased competition. Newcastle Agri Terminal, Bungie, and also Quattro looking at developing their port systems as well. So outlook there looks pretty tough for Graincorp, and again, weather conditions will be a huge contributor in the short term.
So it sounds like Archer Daniels dodged a bullet, thanks to Joe Hockey.
That's right, yeah. Joe, of course, pulled the pin on the ADM, wasn't it? Yeah, Archer Daniels Milford takeover. Graincorp still has a lot of corporate appeal, no doubt about it. You know, traditionally these types of companies trade on a enterprise value to EBITDA multiple of around 9 times, and I think Graincorp's about 15% lower than that.
Yeah.
And certainly too, since ADM came out, there's a bit more competition around the place. So if another, and ADM may even come back in, I think they're still in there with 19 odd percent.
Correct.
So, you know, they may even instigate a takeover, but to be buying on that sort of
you wouldn't buy on that.
pretense, yeah, it's pretty risky.
And it's a bit like ASX, when the Singaporean Stock Exchange made a pretty fulsome offer. Again, I think it was Wayne Swan at the time went, not going to happen. So you just got to be very mindful that, sure, if there's international players coming in and buying, but if the government goes, dare I say it, all Pauline Hanson on you, you've got all sorts of problems. Anyway, I think that's about as far into politics as we're going to go today. Anything else you wanted to cover off?
Just quickly back to Graincorp, the molten oil business is actually going on really well. So, if they can, fix a couple of these issues, the business is holding up reasonably well. But, the 12th of November we'll get a bit more detail.
So in the short term, we're just watching, waiting, but we're certainly not buying at this stage.
Absolutely. I've got a price target 750 for mine. I think they're about 840 at the moment. We'll see how we go.
Michael, the eternal optimist. Ladies and gentlemen, thank you.
Thank you.